In this video, traders, we're going to look at how to avoid taking big hits as a scalper. Stay tuned. Hey traders, a very warm welcome to you. Alright, so question came in from a viewer, a subscriber. Appreciate all your comments and questions. This one was from NSA Key, and he said, or she said, would like to see you discuss some workable scalping strategies. As a scalper, the hardest part for me is determining how to cut my losses. Working in such a small time frame using a reasonable stop loss has not been proven overly practical. Would like to hear your thoughts on it and how you avoided taking big hits. Recently, I've been laddering my buys whenever the market moves against me. This has helped me to profit a lot more and lose a lot less, except during those few times when I'm very wrong and the market continues to move against me. I am left with a heavy loss, which kills my gains. Cheers. Right, thank you NSA Key. Really good question. God, I love your questions, guys. These are a good bunch of questions we've had, and I look forward to more of them. So great question. Perfect thing. You know that you're just asking the right questions when I see this kind of stuff. Right, so let's draw our famous little chart here and let's talk about that whole thing of how we avoid taking those big hits as a scalper. So what we want to do is look at some of the things. NSA Key there has said some crucial points, and what he has said is he's found it challenging to do the one hit one out, which is what I'm taking from that, as in using a stop loss, a specific stop loss. In other words, let's assume we've kind of found a bottom here, we've gone up, we've come down, and we're looking to buy this bottom. Now that's the worst chart in the world, but you get the idea. Let's just assume that. Work with it and picture it in your perfect chart. So let's say that we're looking at that scenario there and what we're looking for. So maybe we're looking for, a couple of candles here, looking for one kind of flush candle that then covers back up, and maybe that's our buy trigger there. If we went on a very short-term basis on that, it's a kind of double bottom, it's at resistance. We've seen a little bit of a flush, didn't go, and we're kind of buying here. So imagine we're buying in the exhaustion area under support. Now, what NSA Key has said is it's quite challenging to buy with a kind of tight stop, because you're working on such a small time frame, and let's say you're working for a 10-tick target, a 10 pip target, and you've got a 10 pip or 6 pip stop, whatever it may be. Very challenging to get right. A bit of noise pings you out, and I agree, it is challenging that, and under certain conditions most of the time that's a very difficult ask, because a little bit of noise can ping you out and then it goes, and it can be quite frustrating. So one thing he has said, which he's spot on with, is okay, what about if I'm layering in to my trades, i.e. when it goes against me, I'm adding a little bit. Let me get a different color pen, let's go the orange. I'm adding a little bit, and I'm adding a little bit more, and I'm adding a little bit more, adding a little bit more, and it goes in my favor. I'm kind of guessing he's taking some out, and trading around that position. But the question is that when it starts to go against you, the trouble is you've got a full boat position, and let's say that next candle then just does this, and which it will do from time to time, you're getting stopped out and hit with a heavy loss that's not really making up for the times you're scaling it out. So, and that makes sense mathematically as well, and I've been there and I've done that. So one of the things you can do to help you do this is to make sure that you have a slightly extended target to allow yourself to scale in when it goes in your direction as well, because that will counteract the time. So just imagine, for hypothetical purposes, you've got a 50-50 shot of that going up or down. Okay, if you are scaling into the position as it goes down, you're always going to be in a full position if it goes straight down. Now, of course, you're going to capture some that go down and come back up. Great. But if it goes straight up, you're going to be in a kind of fifth the position, or whatever position it is. So you need to kind of compensate for that somehow. And one of the ways to do it is to make sure that you're scaling in even when it's going in your favor. Now, of course, that may mean that it goes up and comes back down and kind of stops you out from that. But that's okay, because really if your direction's right, it means that you're still in a full boat as it goes in your direction, and that's allowing to catch you for some up there. So that will mathematically hopefully negate the times when it just spits in one direction. If it spits in the up direction, then you're going to be in a decent full size when it does do what you want it to do, and then you can start to scale out as it goes up. The other thing to think about is that, all right, I need to be very, very strict with my scales. So in other words, okay, rather than adding and then, so let's say you've built up a big position, then it finally goes and it spits you out, is you layer in, but you have stops as well. So let's say you think all of this area is a buy, maybe you have a nibble with a stop, maybe you have another nibble with a stop, and maybe you play around a position, and you maybe have a core, you add one with a stop, you add one with a stop, and it comes back up, you add one, and you be a little bit more fluid with it. And I know that's a bit of a, is it a cop-out? No, because this is what, you know, scalpers do. But to kind of describe it is that you've got a core thesis, and many scalpers will look at that and go, right, my core thesis is going to kind of pop back up off there, and I want to kind of capture that little pop, that little springboard off that low. And so they will trade around little bits of spikes to the downside and try to capture those, and they'll try to capture the spring back up, and they might get 2 or 3 of those before they actually get the thesis of the trade, which is the actual pop. And so trading around a core position is quite a nice way of doing it. I know traders have made in excess of $2 million a year doing exactly this kind of thing, trading in and around a position, multiple positions, adding to the position, and then as it comes back up, scaling out because of the fluid dynamic nature of the market. Now, did he get caught out in brutal moves from time to time? Yes, he does. He gets it absolutely handed to him because he gets caught in stuff, and it might spring back and he might be able to take some out, and he's quite disciplined with that. But if it goes another leg, he's stuck with quite a big position. But it still works for him because that's once every, you know, let's say 100 days it happens, and some days he's on big positions that go in his favor, which is why it's key also to make sure that every so often, if you're on the end of a real good spike, you're not so hasty to cover it. You're like, okay, well, I've got a big position here, it was a scalper's position, it suddenly shot off, let me just be a bit more calm and cool with it and see where it goes. So there is that. So summary, guys, is that try to scale in as it goes in your direction as well to negate the fact that it might just spit out. Accept that it's going to do that from time to time, and see if you can get better at kind of working around a core position so that even if it kind of goes down, pings back up the next bar, you've still managed to accumulate a kind of couple of batches of profit that if it does go through, unless it's gone straight through in one big move, the very oscillations have allowed you to kind of work your way and play in and around a position and accumulate. It's not for everyone, this, you know, it's a very tricky and challenging way to trade. It's a very enjoyable way to trade if you're good at it and you like it, but it can be very, very tricky and challenging, especially from a mental perspective as well. Like, where do I buy, where do I sell? And if you get it wrong straight away, often it hurts really dramatically, or very often you'll get it, maybe you'll scale out and then it'll suddenly shoot up and you've kind of felt like you've left a lot on the table. But you know, that's the way it is, guys. Anyway, how to avoid taking big hits as a scalper. Not generally possible all the time, but some things that perhaps you can do to kind of mitigate that risk. Appreciate the question. Cheers. Bye-bye.